We're recording. Hey guys, this is Julie. I've got Andrew here with me.
Hi everyone, how are you?
Great, great. We're going to be doing a quick presentation on bell probabilities and opportunities for, hitting these PT levels for the JETS indicator. And so happy that Andrew is finally with me to talk about this. Yeah, seriously, it's
Oh,
great
thank
to
you
have
for
you.
having me. Thank you.
So, you know about the bell curve, Andrew, right?
Yeah, a little bit.
So PT 123, I mean, keep it simple. What do you think? Higher time frames?
Exactly. I think the bell curve itself, is what options are all based on the pricing. And that pricing is based on probabilities, which moves markets. And I think from what I've seen and knowing you, the PT indicators levels are phenomenal because they're picking up what's running markets, and with market liquidity being as low at what it is, and so I think algorithms are what 38% of the market or something like that, specifically for vol. But we know it's 85% of all trades. It's your levels are picking these up perfectly because there's so many of it is based on this type of probability.
Yeah,
So
there and when the, PT3 or PT1 price reaches that level on a higher time frame, like a monthly or weekly or something like that, PT means profit target. So you arrive at the destination on the volatility distribution. When that happens, you can get an opportunity for a reaction. Either you've hit the target, right? And it flattens out, or you hit the target and it turns around. So, or it can hit the target and keep going, right? Even further. But there's
right.
usually some sort of reaction at those levels. So that's the opportunity. So that's what I'm so excited and am glad that you're here. So, we discussed what do we want to talk about. My favorite subject, and that's the VIX and ES correlation. So I'm so happy you're here. Let's take a look at some charts very simply. Um, so I'll let you get started. You had some really keen observations of what the volatility was doing in relation to these volatility levels.
Well, as as far as volatility goes, it's or the VIX itself. A lot of people just call it the fear index, greed and fear, I guess. Um, but what I use it for, and what your system picks up wonderfully, the indicators, is when it's stretched. So, in other words, when the market's too short or too scared, or when it's too greedy and too bullish, it'll pick up those extremes because you want to be particularly, as I mentioned earlier, it's you versus the machine. So unless your machine put right on exchange, you don't have that edge. So you need a system. A trading system, the way you trade, and that means have the correct indicators, the temperament to be able to get in where the machines get in ahead of the machines, for want of a better word. And that's why I think this is uncannily brilliant that you've come up with here. So I do feel honoured talking to the person who actually invented this, because what's happened over time, what Jules has picked up, is the shift in traditional Scholes models, right? Black and Scholes, I should recognise both of them, I guess. Um, that's what's picking it up. So if you look at the levels that Jules are pointing out, let's look at the dumps back in. Well, actually, what's going to be fresh in our memories, everyone, is the most recent ones in March, April, when those New York and California banks blew up and got bailed out. You can see when the Friday to the Monday moves. You can see that perfectly on VIX, where it's hitting the upper PT line, the white line, and it's hitting at the same time the lower PT white line, right? So that's telling you that the market's extended or short, extended in length, I guess, in VIX. So that's the first thing I noticed, that it's picking that out. And remember, the reason you want an indicator and that sort of thing is it's not emotional, and that's why algorithms make money. Whereas we get emotion, it's the end of the world, or you get all greedy, and that's picking that up perfectly.
Okay, yeah. I wanted to agree totally, point out, these distributions that I've selected for modeling. PT is a variation of the Black-Scholes. Everybody has their own mix, right? So this is my variation of the BSM model. And so this distribution that I'm running is modeled after, the VIX calculations themselves. They use first only SPX options, but they use no more than 37 days. 37 is maxed out, but no less than 23. So they have to have between 23 and 37 days in that VIX calculation, and then they benchmark it on a 30-day average. So um, I put together a 23-day distribution and a 37-day and a 30. And the whites are all three of them. So that just shows you're inside, the ones, or do you dip outside of it? And so here was a dip, um,
That's that banking time, right? That's
yeah,
your arrow. Yep,
we
yep.
had a volatility spike up to the 23-day. We had a break of this 30-day one. We broke the 23, we broke the 30, and we broke the 37 days. So we were coming up to the 23-day 3. So a little bit higher volatility in all of this low volatility world. And then the volatility started selling off. And we're at the lowest vol ever in a year or so. And the price has rallied up to the upper targets on our distributions 30, 37, and 23. So we're sitting right now on the level of the that dashed line. Which one of the ones am I on? Hang on 1 second. See if I can get in here. We're sitting on the 30-day. So we're already at the 30-day benchmark. If it spikes up, do that little pop and drop, it's going to hit these upper confluence of the higher time frame ones. And then if it breaks that, it can reach up to get up to these higher threes. But usually the ones contain the price, and it just depends on where you are in the distribution of the volatility. So you can see down here, we're reaching the bottom of our ones here also. So I would say we're very close to a volatility low. Very close. We've got maybe a point or two left, and that's it, just like it is here. And we could see a turnaround pretty soon. Um, you know, I don't know. Maybe they're trying to send it to zero for Christmas. What do you think?
Volatility to zero.
Yeah.
I think the lowest I've ever seen it's like 11. I think maybe it's been single, but I remember seeing 11s and 12s, and that was near the all-time high. I want to say. I mean, don't quote me on any of this, but more or less around those numbers.
Remember, we were talking about how the last time it was this low, they were pumping massive QE in the market. So this is when the QE was at its, all time, it was still being pumped into the market. So we are below this level now without the QT. We're at the opposite
About the
end.
QE or
The
the
QE, excuse me,
yeah,
without
yeah,
the
yeah.
Q, I said it wrong. We're at QT, not QE. So it sort of like that's why people are getting massacred in the market. They were expecting bounces.
Yeah,
And
so a lot of people just plainly shouldn't be trading, is what I would sum that up in. As far as QE goes, what's effectively happened when uh, our friend Janet Yellen decided to bail out her friends her rich friends at California and New York banks, and let's be specific, with a $500 million bailout. Remember, it was 250, so then it went to customers over 500, which is less than 1%. What basically Jerome Powell had to do then was backstop all those people. So those accounts, and then if you remember, there was more runs on other banks. So it then became effectively bailing out all banks. It became a political thing.
Well,
And what
we
it wasn't.
right,
So
yeah, right now they've also opened a facility up, so they're backstopping banks. There will not be a bank that
yeah, the
fails.
regionals, yeah. So
It
they can't now.
yeah,
Otherwise,
there's no bank that's going to fail, and I'm wondering because of this facility being backstopped, the liquidity, even though they're taking 90 billion a month out in QT, because they're backstopping the banks and saying they're not going to fail, maybe that is what also supported the market. What do you think? As you know, a
um, well,
quasi QE.
well, I think it is QE. That's what I was going to get to. Is that so? Basically, it was clearly a political decision bailing out those banks, right? So then from Powell's point of view, he doesn't want to be politicised, or I'll put it this way: the Federal Reserve should not be politicised. So then that had to, behind how closed doors, however they came out with it. Yellen was obviously doing a political game, the administration, whatever you want to call it. It's basically it's all or none, so it had to become that. So QE is about increasing the money flowing out there. And I think we've discussed it a bit over at Traders Community in the weekly that we do every week. And this week's Faces is one of the themes actually is short covering, short squeezing, which we've been talking about for a while. And the spreads that Jules is picking up, we picked up a few weeks ago separately in the interbank spreads. And actually, so Bank in Canada does a lot of stuff on that. So the interbank spreads, which the VIX is another one, they're all fear measures, right? The VIX being the spread between the SPX options.
Well,
So you picked that up. So yours is picking up better than any of those,
and,
like more quicker. Is that a good word? Quicker?
I like it.
More quickly.
Quicken, quicken. Well, notice down here, Andrew, that the range on the daily VIX is 122. So if we got 122 below the current
You
low,
mean 12, right?
122 is the
Oh,
range on
sorry.
the
Yeah,
VIX. On the
I'm like,
VIX, I
yeah.
apologize.
My bad, my bad.
And then if we take 122 and subtract it from the current price, 1455 of the volatility, that would take us to 1333.
That's certainly achievable. It's been there
It's
before.
it's sitting right here between our ones. So I would say we're one day away from
Oh, it can take a long time to get there and work its way down, yeah.
well, I think that we're one day away from low volatility. We have 122, and within one day we can reach that level. So we might, and then that would take us up to the 43.54 level. And so we might get our reversal very quickly. So,
Yeah, I mean,
so
generally it happens quickly.
usually when you see that level, now it can go sideways on it and hang around the level, and sit here and just walking the band sideways. It can do that, but I think that we're going to watch very closely this lower oscillator, the PT oscillator. So let's maximize this again. See if I can get. Hang on, sorry. My apologies. I think I just deleted it. That's why.
No worries. Well, the next Fed is in on the 2 weeks, I think, 12. Then on Monday you have, so next week You got a few numbers going to be catalysts. It's all going to be all about the consumer now.
Okay.
So you
So
have ISM on Monday, so maybe.
that's what will trigger this then, because we're at below 1.5 of the distribution. Oops, not 15, 1.5. And once we break that, then we're going to see that volatility spike that everybody's been waiting for.
Yeah, they've been waiting, kind of like natural gas traders.
It's,
Bulls been waiting from 10 or to 2. So same thing here. Yeah, there is a gap there. Look on your chart from 16 down to 15. So there's a gap to fill. One would expect. So the VIX never goes straight. I mean, obviously when it does those real panic and fear things, but like the banks. But you can see it night, and that's what I like about you're picking up those little trend changes within it. So
so
even if it goes to 2, right,
yeah.
is what you're saying.
So here we're extremely low volatility levels. We're within 1 day's range of the low. So this will start. So we're going to look for that first inflection. So see this inflection? So we're going to get an inflection up, maybe above a prior low. So above 127. Anything above 127 is going to start going higher. And what we want to see is this nice climb in the volatility. So we can see the range expansion,
Right.
and that is what we're waiting for. We had the traders going long, trying to go short on ES while the volatility was going short. The range was still low and short.
It hadn't broken out,
Yeah,
yeah.
it had not broken out. They tried to get in short at this May, and it rolled over on them. So this is what crushed them. They tried getting in short at the right, you would think, but then it rolled over and crushed them. So I feel their pain.
Well, that's what I was saying earlier about the system. So what got people bearish was obviously the debt ceiling nonsense, the banks. You had a disconnected series of Fed speakers. Some were dovish, some were hawkish, depending on what day it was, numbers. And then, of course, I think we have it on the side, but basically the S&P is positive because of, 6 or 7 tech stocks. So that's where it's good to have just be unemotional and all that, because if you're not watching those stocks for whatever reason, like Nvidia is the famous one, of course, but you can get all around, yeah.
Well, I hope that we can break this 1.5 and at least try to get to the 2 or the 3. The vol has just been too low. It's just not tradable. It is, it's wreaking havoc on everyone.
Well, plenty of people making money. Don't worry about that.
Yeah.
People that don't know what they're doing, for sure. But remember, so it depends how you. So when vol becomes untradeable, the answer is you don't trade it, right? So that's when you get low vol. So that also, it means you trade something else, and guess what? That's the S&P. So that's what goes on, and you get those final moves, right?
Well,
And your system's picking that up.
yeah, I'm picking up right now that we're pretty close to that inflection, I think. So,
Yeah. So yeah.
but hypothetical, performance has to be stated, because just because something occurred in the past, like it would get to one of these white lines and it did not react, it can go sideways. It can just sit on it. So, or it can break it. But the usual pattern would be, if it doesn't break it, it's going to turn around. Um, so maybe, all things considering, we could get some volatility, I would hope.
I would expect there's a lot of data points coming up. I think a lot of people are just out of the markets. It's kind of doldrums. So you look at the S&P at a very small range for a long time. They call it's like a vol crush or a vol dislocation. So what happens, and eventually, if you go back to 2017,
Okay.
the same thing happened, went sideways, sideways, and then you had those massive moves.
Mm-hmm.
And we had a small version of that maybe a week ago, if you can look at what happened 2 weeks ago, where we had it been going sideways for a long
Yeah,
period,
2017, we just stayed inside the one the whole time. It just stayed inside those ones.
and then it exploded, right?
And then it
At some point.
exploded. And
Yeah.
but I mean, it was sitting and hugging those ones. And
So
then
you and for how long was that? It was a long time.
yeah, it
So it
was a
goes
long
a lot.
time. Yeah, it was a long time. It was for, QE suite forever, right?
Yeah, so what happens so people become very complacent in their own mind. So greed overtakes many traders. It's very big discipline. So they believed it was real. For example, the tech bubble,
Mm-hmm.
and so the inverse of that is this is what's caught people in 2023 is they're now, particularly the dribblers you see all over things like FinTwit that actually don't trade, but their conditioning, right?
Mm-hmm.
Human conditioning, whatever,
Mm-hmm.
uh, that tech can never go up again. So there's a big extreme, as Jules is pointing out, on volatility. Things get overbought, oversold, and the most extreme tend to be technology and biotech, energy at certain times, right? But that moves happen. Um,
Yeah, we had some AI stuff come out, and I guess so. I saw that robot following that
the
guy around.
latest
Did you
trend,
see
yeah.
that? Did you see that tweet where the robot was following
No,
the
no.
guy, his security robot?
Oh, really?
Oh, it was
Bodyguard?
frightening. Oh my gosh, you didn't see
I,
that?
I have seen that South African
He was
movie.
walking right behind him, in his gigantic, gigantic robot, right?
Yeah, yeah.
His
I
security
haven't seen.
guy.
I've seen movies on that. I'm
Oh
trying to think.
wow.
It's a South African movie with Hugh Jackman in it.
Let me let me see if I can pull this up.
Look, if my kids weren't, if they were around, I could tell you if they'll remember.
I mean, it's like, AI is already here. It's, I'm
Well, it's already here. It's been
yeah.
here for a while. It's just the latest thing. I mean, Nvidia was actually one of our better buys from last year, so we got lucky with that.
Hmm.
And Nvidia, remember, is more than just AI. It's the premier, best in class, if you like, data, and that's where,
Yeah.
of course, AI. So there you go. Impressive.
Look at that.
That's he
Look at
shot
this.
himself in that
Look
movie.
at
I
this.
saw.
Yeah, look at this. He's following the guy. He's the security guy. Look at that.
Oh, that was a few years ago, I
No,
want to
this has
say.
just happened.
Oh,
This has
really?
just happened. This is just this weekend. And he's all armed. Look at that. He's following right behind him. He's on duty.
It's gonna be interesting if they have a
I mean, that's
malfunction.
not like a demo. That's like a real live.
So I remember seeing something like this a few years
That's my
ago, and
security guard. It's crazy.
yeah, but I'm wondering if this is old. I've seen this before. See, that's at the
You
Saudi
think
Stock
that's old?
Exchange. Yeah, that's the Saudi Stock Exchange
Okay.
when it went, thereabouts. And that's a model that comes from. There was a South African movie. That's the thing out of it. So
Well,
probably had a human in it.
it's frightening, yeah. So, but anyway, you said AI, but that's given the market some volatility this week.
Yeah, yeah. So there's always something new, right? And they
Mm-hmm.
forget about it. So
Opportunities,
no one.
yeah.
So you
So,
got to remember a bit. So what happens in a market at the top of a bull market is nothing better than a casino, and as these at the bottom of a bear market, same thing. Here's what's interesting, Jules, is that 20 handles from here, we are then up 20% from the low of the S&P, and that means we are in a bull market or the bear market's over. However you
well,
want to,
that's
under those old
that's
traditional.
interesting. Yeah.
I'm not saying
We're at
it's right.
43, 4350, is sitting on my ones. And there's going to be some volume sitting at that, right? Some
Oh
call
yeah, yeah.
walls. There's got to be some call
It's going to
walls.
be interesting how it opens up. We just had OPEC today, so when they had their press conference, they implied that they weren't doing anything till
Well, I
2024.
would be very careful for any people that are continuing to sell puts here.
Well,
Um,
yeah, I mean
because
that's
I think
very high risk game.
I do. I think that this is at an inflection
Yeah,
point.
it's not worth the risk.
I mean, this ball could just start. skyrocketing from
So
here.
just remember, if you're a market maker, you're selling puts, you're covering it pretty well straight away. But
Hmm.
there are a lot of funds that they just think the income, so they get complacent.
Yeah.
But what I was going to say about OPEC, this is the information, this is the blatant manipulations going on. So they ever do a press release,
Hmm.
specifically says they're going to keep it going the
Yeah.
way they are, voluntary cuts, doesn't mention the amount, right? And then they're going to do the same thing in 2024. So obviously, the intention there is their hope, they're trying to manipulate the price up. 2024 is enough. In the period between the press release and the press conference, which is 20 minutes probably, maybe they got some feedback, I don't know, but they come out, the Saudis, and say, well, we're going to cut by 1 million barrels in July. We're not sure what we'll do after then. They're not clear if that indicates the 500 barrels already cut. So what am I saying? The reason I'm intentionally saying it kind of like gibberish is that's what they're trying to get across. So you're going to see more and more of that from the people like OPEC's a particular nasty beast, but particularly OPEC Plus, right? You're seeing more of this, even with this AI, and a lot of these earnings statements that are moving big. So Nvidia wasn't even the bigger move. I think Marvel moved even more. But
Well, we have some very interesting time points coming up also. We've got OPEX quarterly roll. The quarterly roll is coming up
for
for the
the VIX or
futures.
the SPOOs? The
Well,
SPOOs
the
futures, you mean?
SPOOs are going to
Yeah.
roll. You've got your quarterly expiry for the institutional options expire, and you've got your expiration all next week. Not this week, but next week. So we could be flat going into that. It could just, hang out and go flat, is why I was saying it could walk the line for a
It
week.
should be volatile. I
But
mean,
if
given
if
how big
if it is
it is, yeah.
volatile, we might get that explosion now because it depends on where it positions this week going into next week. Are they going to front run it? Um, or are they going to try to get volatility as low as possible before that event happens? And if that goes as low as possible, this could go down to 758.
I guess that's possible.
I mean,
Well,
I don't know.
it's all about complacency, right?
Yeah.
There. I mean, so here's the ironic thing that happens with if you're measuring a risk on, if you're at a fund, and this is why blow-ups happen. If you price your risk off Black-Scholes, which many do, off VAR, stuff like that, which becomes, which then dictates much of the market practices. So I guess they become a they. So what happens is as volatility
Oh, no, 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 wait.
decreases,
I gotta. They become a they.
well, you're using the term they.
Uh-huh.
So
Uh-huh. I busted you.
I'm trying to
I
justify you
know.
without
He's always
saying so.
he's always cracking me saying, "Who is they?"
Yeah, they're in the bloody day.
There's no
But
they.
if you want to come up with a they,
Uh-huh.
so yeah,
That's funny.
um, that effectively that's what it happens because 85% of people just copy someone else. Yeah, I mean, if you've been on a nonsense social media like Twitter where you got people that have no idea about trading, never traded, all of a sudden become experts, right? That's why we always joke about experts of everything.
Well,
Um,
we're going into an OPEX quarterly roll, um, quarterly expiry, a
oh yeah,
huge
we got
week
a lot
next
of big
week.
things. But what I
Yeah.
was just to finish what I was saying. So what happens if your risk at a fund becomes that? It means because your volatility is going down,
Hmm.
the risk manager is going to go, oh, you can actually put more on,
Yeah.
right? So you are so what happens is because of that complacency aspect, and they're all the same way, many of them. That's why so-called macros got it right last year because there's so many the wrong way. But then a lot of that was obviously good luck rather than good management, because as you spoke about yesterday, I think Jules or earlier today, that's where a lot of them got caught, and we're seeing that in VIX. So if all that dribble that I just said, that kind of explains why we get these massive shifts from complacency.
Okay. So that makes sense. Yeah, absolutely. We're at a very low point range in the daily, 47.25. So we can, get into this, white ones here, and then maybe see the range pick up as we press down and start coming down towards these lower ones, 500 point range. So this 500 point range to get down to this blue line by next week. So the
Well, what about it can get to the top side too?
Well, I don't think they're going to break their it'll stop at 3760. That it won't get any lower than that by I
So
don't
where did
think
we close on
Vixpiration.
Friday?
So Vixpiration, I mean, I would say I would be, shocked if it got below 3760. Anything can happen. But 3760 is your PT3 for that 30 day.
So
And
what about the top side?
oh, you mean if it goes long instead? It
Yeah,
would
just
it would
dip
stop
low.
at 46.2150, and that's the 37.3.
So we
46.20. If we
closed.
go long, the highest it would go by next expiration probably is that probabilities and opportunities would go to 46.2150.
So cash closed on Friday at 42.81, right?
Cash close on Friday at 42.80 something. Yeah, one.
For
Yeah,
42.81, 41.
yeah.
Yeah.
So we've got about a 500 point drop to get to the 23 down below, or we have
Well, your white line's at
a
40.85.
262 to 263 rally up. So there's double the amount of range available to go short. So if the volatility picks up, that's more conducive for a short than a long.
Right, yeah. High
But
vol
yeah,
means low short.
more conducive. So we'll just see what happens. And if we do just go flat, I mean, it can go flat. I don't like that,
Well,
but
there's been a pattern of that.
it will
So,
all depend on if they're still selling those VIX calls and crushing the vol. If the vol picks up at all, which could on Monday with that ISM, right?
right.
Then we could see a real pickup fast
So, yeah, so
because of
10.
given the low nature of where we are overall. And on without the QE that we had experienced back the last time it was in this low.
Well, we do have QE now.
Well, the
That's my
bank,
point.
we were talking about the bank facilities. Yeah, that's right. So we're back to
Well, they put
QE.
pure money into the market. Uh, money, so your money market deposits are rising. They rose again last week despite this run up on the stock market. So that's a new phenomena as well. You don't normally see that.
Yeah, well, I doubt that we're going to get up to 100 again. They'll probably
100 what?
my threshold for the daily range.
Oh, on the range of the VIX, the
Yeah, so
collapse. So that'd be a collapse.
it would be 100 points for the daily range. But we're at 47, but it could certainly get up to our 60, 70 point range um,
Yeah.
quickly
What these
before
things,
the expiration. So what is the expiration date? Is it Wednesday the
well, you got a
14th?
Fed, yeah, so
14th.
you got a Fed meeting in there. So that's
Oh,
usually,
so we have a Fed meeting and expiration and
yeah, it's
yeah,
like
so
12 maybe.
here's the 23,
But
37, 30. So let me look for the calendar.
And you've also got actually this week you got a quite so next week's the Fed, not the week
Actually, it's the
coming.
21st. So it's well, that is interesting. So
So that's after the Fed.
it's after the 14th. So it's the week after. So we've got 3 more weeks to get there.
But
That's
don't forget in
interesting.
between that they keep moving. You pointed out the 30-day average deal.
Yeah, the 30-day
So
average. Yeah.
so that becomes that's where your line's picking up. So you've also got this week you've got three big central bank effects that are going to come. You've got the RBA from Australia, you've got the RBI from India, and you got the Bank of Canada. I mean, there's also some smaller ones, Peru and Russia,
Mm-hmm.
but all those things create volatility. The Australian one in Canada, particularly relevant because of commodities. Canada obviously tie up America. India, very important commodities as well, and the whole dynamic in the quads and stuff like that. So there's plenty of, and at the same time, you've got a war going on, things like that. So you can
Plenty of
always,
opportunity, yeah.
yeah, so tend to be what happens. Those big moves are when you least expect them. The
Mm-hmm.
old block swan sort of thing. But
Well, on the 14th, I think we have that contract roll for the options,
mm,
and 14th or the 16th. Let's see, the 16th.
you
Yeah, the
got
16th.
CPI, I
It's the
guess.
16th is that contract the expiration for the quarterly. And
Well, actually, you've also got, I think CPI comes out the
retail
day
sales,
before the
interest
Fed.
rate projections. Yeah, there's a ton CPI on Tuesday.
There's always
Yeah,
something.
there's always a ton for
Yeah,
some
that's a
volatility coming
Tuesday
in.
before the Fed. Yeah.
Yeah, yeah. And this week, services PMI, ISM, that'll kick it off. Car-
Well, actually, the big thing you haven't mentioned this week, you've got the Apple, which is sitting at all-time highs,
yeah.
but it's near there. They have their WWDC. You've also got
Hmm.
the Cisco.
And we've got those bonds hitting.
Yeah,
So they're starting to sell like 300 billion, and they're going to be buying 300 billion in
yeah.
bonds.
So there's a lot of misinformation around about that. So what's happening is there's a standard bills.
Hmm.
We cover some of this on the website, but you got your bills, standard bills, your short-term bills. We all know the bonds that are
Hmm.
monthly. So they were put off because they had to, right? Because of the debt thing in case they weren't able to do it legally. So all that starts up again. So as far as all the stuff about liquidity and all that, they have 2 years to do this. And the thing that I get out of the debt thing is the agreement. Basically means effectively don't have a debt ceiling until after the president's election. Now they're meant to do what they say. Well, so what that also means is that they don't have to do all that catch up of the shortage of money um, until 2 years effectively. So they can do this quite slowly. And I think that's where a lot of people got it wrong. You're seeing it in the bond pricing. Look at the spreads. That shows you
Hmm.
that. Stock market people, interesting the way they view things.
Well, we've already started to get some of these purchases scheduled.
Yeah, but they're always scheduled. There's nothing new there. They just
Well,
added on a couple of billion.
okay. Well, we
So,
we certainly have a lot of opportunities this week and the next week for some improved
well,
volatility
right.
conditions.
So, yeah. So the what tends to move the market more is the 2, 3, and 10 bond whatever you call it. So they're every month. Every
Mm,
month you got opportunity.
okay. All
And,
right. Well, have you got any other things that you would like to add or
not really. I think we got some real big levels. I think the important thing is when markets get like this, as we know, as you pointed out so well, Jules, is the risk of being short vol down at the bottom. But it doesn't mean you have to short until you want what's got gets people in trouble. They get that view, they get all bared up. So they tend to you got to wait for that break as your indicators show there. Otherwise, you get this 500-point rally against you, right? Spoos rally. And the same on the long side. If you've missed it, you wait for an opportunity. There's always opportunities. So that's what I love about these ranges that you got. Stick to the ranges. Let the market tell you what to do instead of you telling the market.
exactly? Don't get a bias. Trade the range and the vol. That's right.
Yeah, I think it was Macquarie used to have on their door, leave your bias at the door, something
It's
like that.
hard to do.
Right, that's why you
I mean,
trade.
every fiber in your being is wanting to do something else, right?
Well, when you get to a certain level, you need a bias, right, to be proactive, but that needs to be based on a lot of checkpoints. So
Okay.
to
Yeah.
keep your emotions
Yeah,
your,
or
in
just
check.
separate the macro because nothing is working, right?
Well, I hate the way they use. Well, it does work. What I hate about Twitter is you got people that they're hobbyists, And all of a sudden they're macro experts. They don't even know what the word means. So it's actually playing perfectly micro and economically what's going on in the world, if you know what you're doing.
Well,
So, but they claim it's just an excuse for a win and a loss,
well,
basically.
if you keep your eye on where the volatility is relative to these levels, it can also provide a football field, a metric for, measuring,
Yeah, it's a
getting,
mat.
yeah, yeah,
Think of it. What I think of it is like a matrix
yeah,
or a matrice,
yeah.
whatever your word is.
It's a distribution
Um,
you can lean on, yeah.
right. And so if you look at that and then look back, you'll understand what macro is actually doing rather than, I'll just finish with this. So the dribblers are all out there.
Yeah.
Um, that China was going to reopen. So firstly, China shuts every January every year. Anyone trades commodity knows because of the Chinese New Year, right?
Hmm.
Anyway, that's a fact. So we're then China's been running in. They've had a massive property collapse, bigger, and so their property market is the biggest in the world. That's all collapsed. They've got a massive social problems over there. We've got such a big country, different. They got the economic zones. There's not a lot of happy campers. They open it up and it doesn't fire at all. Now, iron ore and coal all told you that was happening. But so people that claim to be macro experts, just it's all later data. You got to look into the future, and you got to look at reality. So that hasn't happened, and that's why we're getting desperate measures from some people like OPEC and all that. But what they're doing, so the free market should let work for themselves, because eventually the rubber always meets the road,
That's the truth.
always meets the road in commodities and stocks. And volatility is so we're lucky in the stock market. We have this volatility index which measures on a daily basis, so I guess by the hour or the minute, that those constant idiotic human emotions, which we all have. So you want to kind of handbrake
Well,
it. That's what I use it
yeah,
for.
you've noticed the gap here, and they have absolutely been selling the VIX call. So, at some point that has to change.
Well, they have to, right?
Yeah,
So
because
the
they're out of
reason
room.
that
Now, we can break ranges, especially going up because the vol has been so compressed. I'm expecting these ranges to break. I'm waiting for a breakout, and we have a gap here going from the 30-day to the 37-day. I mean, when you get the volatility, I'm expecting to see some of these closer in
at some
threes
point,
break and for it to be running for that outer three, um, to be able to get
well,
uh,
there's plenty of event risk out there, so it's
it.
certainly
Yeah,
possible.
it's certainly possible to get up there. Like here where it broke out to try to get up there.
That's
But
probably the war right there, right? Putin
well,
invading. That's probably well, that one was. If you go back,
but yeah. Oh, okay. The yeah.
so or even
This
that
is
was very
this was
predictable.
COVID. Yeah.
Oh,
Here.
that was you
Yeah.
slid all the way back then.
Yeah.
Yeah. So remember what VIX is? It's the option bids and auction and options price. So obviously something like COVID, the fear of the unknown. That's why it goes crazy. So just think what's going to move it, and if people are too complacent, just don't never
Well,
fall in love
and
with
and
it.
just the fact that it likes to go to the bottom of these ones and turn around, right?
Yeah. So
Because that's where
use
their
that.
risk is. Here it broke it. It broke through and they turned it around very quickly, but they did get a
There's they
break.
again. Yeah, but
They they vol crushers were selling it.
so basically what happens when I said they got to sell it. So if I'm long VIX futures, right, to maintain that position or quote whatever their position is, or they're part of a market maker book, they have to sell the actual vol so they can maintain their delta, right? So that's what happens. You see it in natural gas probably better than anywhere. And then eventually they're all one way and boom, and you get the pop, right?
Hmm.
So
Hmm.
think of it more like that.
Okay.
Uh,
Well, they're out of room down here, babe. So we'll see.
so
We'll
just
see.
remember this: rules are made to be broken, markets are made to be broken.
And ranges are
And
made to break, right?
right, so
Yeah. All
just
right.
expect the unexpected.
All
Well,
right.
thanks for having
Well,
us
I
on
enjoyed
and
it. We're gonna have to
introducing
do.
all this
We're gonna have to come
stuff.
back and do a market cap next week. All
Well,
right. Thank you
let's
so
see
much. Yeah,
that.
we have to talk about doing that. I would love it. All right.
Well, thank you, Jules.
Thank you. We'll talk to you
Have
soon.
a great week,
You
everyone.
too. Bye bye.